Ginger Thomas. Oh my goodness, Ginger. How are you doing today? You're just one of the people out there. Let's see what happens. Okay, get out of that. Get out of that. Get out of that. Get out of that. Cool beans. Okay, so that's Instagram. Wait a minute. Yeah, we want Instagram this time. Wow, so many challenges. No, that ain't right. Okay, and checking connection. All right, well, let's see how it happens. All right, just because of more data on it, could be, do you make a living from trading and what amount of time do you spend on it? Ren Brick, that's an awesome question. I haven't had that question in a while. So I'm retired, okay? So I don't make a living on my trading, okay? I took all the money that I made in my working lifetime. Well, I spent most of it. And then the last bit of it, I invest and I make 1% a week. That covers all my bills. This right here is just for fun, and kind of for fun. I'm actually doing this for my children and my grandchildren. Now, my grandchild at the moment is 4 years old. No clue whatsoever. What about DEC? Is that December or is that DEC? I have no idea what it is. Poor connection on Instagram. All right, so it's just something about Instagram today. I don't know what it is. So how much time do I spend on it? About 10, wait. On my own personal account, about 10 to 15 minutes a day. With you guys, it's 2.5 hours at night and about an hour or two in the morning with the morning trading group. Do I like Iron Mountain? No, I don't. They haven't been around long enough. Thank you for your answer. You're awesome. Thank you very much, Ren. But think of it this way. Bradley, have you set your grandchildren up with a custodial Roth with stocks? No, I have not. It's diversified energy. So here's the thing, Bradley. My grandson is part of the corporation. So he's actually a minor board member of the corporation. And yeah, he works for it. Not doing a whole heck of a lot. I mean, just basically simple, easy stuff. Now, that being said, at some point in his life, when he gets older, he will have access to borrow money from the corporation. Okay, and that, it has to do with, there's a lot of, looking good. I'm glad you're doing well, Ginger. That's awesome. I keep meaning to go over there and hang out, but you know, the storm thing kind of put a kink in my plans. So back to my grandchild. I only have one grandchild, okay? I'm saying for my grandchildren because I'm hoping at some point in time when I have more grandchildren, eventually they will be able to see what their grandfather did and understand it when it comes to money. Because I'm going to be very insistent that my children and my grandchildren get nothing until they understand the responsibilities of money. Okay? So, yeah, it depends on how you want to look at that. It may be a good thing, it may be a bad thing. I don't know yet. All I know is that, all I know is that I had a brother who had a substance abuse issue. Okay, now, out of 13 kids, the youngest one is not supposed to die first. Now, he had an issue with substance, so he's no longer with us. Maybe because of that, I really don't know. You know what I mean? But it is what it is. So I want to make sure that my children and my grandchildren don't have access to any of the money that I am leaving them until they understand what it's going to be. Yeah. Okay, thoughts on IAC. What the heck is IAC? IAC. We can do this one really quick. IAC's a no. Now, who asked for IAC? Caleb. Now, Caleb, you're new here because I'm pretty good with names, all right? Now, LAC. LAC. That's just as bad, dude. Okay, do you see this right over here? The top line up here. This is the open, high, low, close volume of the day of the stock. It tells me what the stock is doing. Down here, this is the option chain. I'm sure you've heard of stock options. Stock options. you have the opportunity to get a call option or a put option. Good evening, Adam. Sorry about the confusion with YouTube. I had to re-upload it for some strange reason. With options, you have call options and put options, weekly options and monthly options. Okay. Now, I don't do puts and I don't do monthlies. Now, I do puts, not here. Here on this channel, I teach one strategy and one strategy only. The reason for that, Asteroid, sorry, I missed it. Did you say anything about Misty? Yeah, Misty's a no, dude. Simone, how are you tonight? So let me get back to that one. Caleb. What it says here, October, November, January, February, nothing but monthlies. Okay, those are months. Okay, now, if I put in AT&T, look what we have now. 18 October, 25 October, 1 November, 8 November, 15 November. Those are weeklies. Those I can trade every single week. I do not trade monthly options because the money is just not there. Okay, I'm terribly sorry about that. The money is just not there. It's not worth my time and my effort. At some point in your life, when you get to my age, retirement, or you might retire when you're 70 or 65, 68, whatever you decide to retire, it is going to come eventually. Edgeman, how are you doing? You have to decide what is more important. Okay, at this moment in time, you're probably in the earning phase of your life where you're looking to earn money and try to find places to put it. At some point where I am no longer interested in the money. My interest is in time. Because as you get closer to expiration, that's a terrible way of putting it, but as you get closer to expiration, okay, what's the average age for a male? 80 years old? So I got 20 years left? You think I want to deal with time? Yeah, no. I don't want to have to work. So I take my money that I have, I invest it in a safe, predictable, consistent trading strategy that gives me 1% a week. Now that 1% a week allows me to do whatever I want to do whenever I want to do it. So that being said, I'm having issues with Instagram. This is not a good thing. Anyway. So as I was saying, all right, I collect 1% per week on my portfolio. That allows me to do whatever I want to do. To a certain extent, of course. I'm not going to buy a new Lamborghini, a big old yacht. I'm past that point in my life. I'm at the point in my life where I want to hang out with my kids and hang out with my grandchildren. The storm is a terrible situation. However, it allows me to hang out with my kids. What are your thoughts on meme coins? Kyle, I don't do coins at all. Nothing but dividend stocks. Andrea, how are you today? Ooh, Simone, Walgreens. We're going to take a look at Walgreens in a second. James, what would you do if your options are going to expire and the price 250 above? Okay, Andrea, give me a stock in particular so I know which ones you're talking about. Okay? Now, I'm going to take this one over here and fix this one also. So hold that thought. The password's 4078.
So what do you want me to do?
Either download it, or re-download it, or upload it, or figure out why I'm not getting a good connection. Connection issues. Okay, Andrea. Oh, Walgreens. Yeah, we're going to take a look at Walgreens right now because Simone wants to take a look at it also. TSMC earnings report predictions. Okay, hold on. Let's go backwards a little bit. Okay, so Walgreens, WBA. I actually own some Walgreens in case you were wondering. All right, first thing, always. Where's the high? Where's the low? Where was it a year ago? Where is it now? What direction is it going? That's clear to see. I mean, I can get a first grader or a second grader say, which direction it's going? It's going down. Uh-oh, big question over here on YouTube. I actually got YouTube to work. I always told myself with expensive cars, I can always rent one for a day or two. That's about how long they are fun for anyways. No need to buy it. Hey, I'm going to agree with you 100%. All right, because I was looking at, I was looking at old cars. I like cars that have class, character. I like a Hispano Suiza, or ooh, ooh, a Duesenberg, Hispano Suiza, Duesenberg, or the old Cadillacs. I'm talking old Cadillacs like in the 30s, the really big ones. I don't know if you remember the Adams family, what they drove. Yeah, something like that. Hey, James. Oh, how's it going? It's going awesome. So think of it this way. Okay, I was out there looking for a vehicle, and I thought to myself, "Ooh, this is a cool car." But the more I thought of it, wait a minute, I can't put any plywood in it. I can't put my lawnmower in the back of it. I can't put all my tools in there because I'm a handyman. I like to fix things. My mom calls me to fix stuff. I got 3 kids that all live near my mom. Okay, so down in the Sarasota area. So when I go down there, I take all my tools with me, and I'm thinking to myself, I'd love to have an MGB or a Duesenberg or something really cool. But then again, why, if I put all in there? No, it just doesn't work. So I look for a pickup truck or an old van. So I got this old conversion van with all my tools in it, and I travel around on it a lot. So yeah, I'm not into the expensive cars. I used to have a boat. Actually, I was supposed to be in the Caribbean. Well, no, not this time of year. This time of year, I'd probably be going up the coast or somewhere. But anyway, besides the point. Like he said, after a couple of days, it loses its fun. So why don't you just rent one for a couple of days and be done and over with? Don't need to own it. But I am going to eventually get a nice boat big enough. I'm thinking 50, 60 foot, and just go to the Caribbean and just hang out there for the winter. That sounds cool. And yes, I will be broadcasting live on the back of my yacht or the inside of the yacht eventually. Not yet, because I still got to get mom's house set up. I still got to get the kids out. The hurricane made a big, huge mess. Okay? So mom's house, all the landscape has got to be redone. She's going to freak out because she hasn't been home in like 2 weeks. Okay? She went to Ireland for a couple of weeks, and then she's down in Venice. And now she wants to come home on Friday. And I think, no, because I kind of like being at my mom's house when she's not there. Love my mom, but I like going to her house and doing work on her house when she's not there. Anyway, so she wants to come back Friday, and still a lot of stuff needs to be done. So I'll be going down there tomorrow, doing some more work from there, but blah, 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 blah. So anyway, what I'm trying to get at is, at some point in time, your focus is no longer on money. You want simple, safe, predictable, consistent return on your money. Most people just give it to a money manager and say, here, you do it for me and you give me a return. Well, the current rate at this moment is a 4% draw. So if you want to live, do some storm damage videos. I did one yesterday, the day before. I don't know if you've seen them, but the last 3-4 videos were storm damage videos. I was standing in front of the house, and these 4 huge piles of debris from, trees, branches, plants, all that kind of stuff piled up. 2 days later, I go back, everything's gone. It's like, cool, I wasn't done yet, because I haven't got to the back of the yard. So the front of the yard, 4 huge piles, about the size of me and huge. Anyway, besides the point. What I'm trying to get at some point in time, you can either pay someone to do the work or you can do it yourself. Now, I'm not a check writer. I could be a check writer, but I don't want to be. I get a certain satisfaction of getting my hands dirty, touching something.
I was watching you for a while without any issues.
Okay, so it's working now on Instagram or?
That's YouTube.
No, that one's YouTube. This one's supposed to be Instagram. Thank you. So at some point in time, you're going to be in the same position. How do you want to spend your time? I'm thinking, like last night, I'm laying in bed watching TV, and I'm thinking to myself, I hung out with my son all day, helping him, because the storm blew one of his windows in, and we were out window shopping. $3,500 for one window. I said, what are you shitting me? So we're going to go buy a $35 piece of plexiglass, put that in while we get some windows made for it. But it was crazy. So we hung out all day yesterday, had lunch together, and just hung out, just me and him. No girlfriend, no children, no other siblings, just me and my son, one of my sons. It was just nice, just me and him chatting and chilling and hanging out. And yeah, so when you get to a certain point, certain things have more meaning. Money has less meaning to me now than it did before because I put in my years. I've been working since 1973. It's 2024 now. That's a long time to be working. My very first job, I believe I was like 10 or 11 years old, working at Old Man Simmons Farms, doing lumber, what do you call it, firewood, and tomatoes, green beans, squash. You guys had acre and corn. Oh, forget the corn. Fresh grown corn. You should just go into the field, pull it off, and oh yeah. Anyway, besides the point. As I'm saying is, sometimes when you get here, what I'm saying is, hey, hold on a second. Hey, CJ, I signed up a Patreon, Cool Beans. Could you please tell me the best way to find the link for Zoom, the spreadsheet, Discord link, and the way to contact you? Oh, the best way of contacting me once you're there would either be Patreon or TikTok. That's the easiest way. TikTok, I watch that like 2 or 3, 4 times a day. And yeah, after tonight, I'll be on TikTok answering the questions. Okay, first thing in the morning, I go to my other email addresses, and and I send out the Zoom link first thing in the morning. Alrighty. So that being said, welcome to the show. All right. So anyway, as I was saying, let's get back to the stocks and let's keep on going. So basically, when you get here to retirement, okay, totally different scenario, total different atmosphere. You sleep until you're done. You do whatever you want. And I like to go to Sarasota and hang out with my kids. I do. Okay, they all work different shifts. Okay, my daughter's available on Sundays and Mondays. My other son is available Tuesdays and Wednesdays, and my second son is available Thursdays, I believe, Wednesdays and Thursdays. And my mother, she's available all the time. So yeah, I go there, mow my mom's lawn, do the, you know how it is. But anyway, besides the point. What should I do with BTI? Okay, right at the moment, we're looking at Walgreens. Okay, let's stay focused. Squirrel. I have ADD, I admit it, so every once in a while I need people to keep me on track. That being said, here we are, Walgreens. Here's the high, here's the low. It's bouncing off the low right down here. It just had its earnings report the other day, and apparently it was pretty good. We had 2 great days in a row. Now, we've been following Walgreens since January. Here's where we are in January. It just kept falling, falling, and falling, and falling. And a big drop right here. When it made this big drop, I bought a bunch. Okay, now I don't, however much money you think I have, I don't. Okay, so think about it this way. If you give your money to a money manager, they're going to give you a 4% draw. So $1 million, you're going to get $40,000 a year. If you can live off $40,000 a year, more power to you. Okay, but you need $2 million if you want to live off of $80,000 a year. Okay, I live off of 1% of what I have. 1% is a 50% return. Huge difference between 50% and 4%. Okay, if I do what normal people do, make all this money and do all this weird shit, then hypothetically speaking, I'd still be working because I don't have enough money to live off of 4%. And it's checking connection. See if it's working now. All right. Let's put it up. Here we go. And we're telling everybody you're live. So let's see if it works. Instagram. Do we have Instagram tonight? I don't know. Maybe we will. Maybe we won't. All right. So Walgreens. Here we are. Currently at 11.07. The 11s for this week, 17 cents to 22. So you can make it this week. 2 days, make 1%. But look at next week. 38 cents. That's a 3% trade for Walgreens. But there's a big question you need to ask yourself. Do I like Walgreens? Hey, it is working. Cool. Yay. We got Instagram working. So we got Instagram, Facebook, Twitter, TikTok, YouTube, another TikTok, and another YouTube. Cool. So that's that. 7. Wow. You know, funny thing is, if I learn how to use the software that's actually on my computer, I can use, I think I call it Restream, and Restream will push it out to everyone. But that means I have to learn how to use that software. It's much easier for me to turn the phone on, hit TikTok, hit live, and that's it. Same like this phone. I turn on Instagram, hit live, that's it. Facebook, same thing. Turn on, hit live, that's it. So much easier. Anyway, so a year ago we're at 22.21. We top of the year is 27. Just recently, here's the bottom right there. Whoops, let's go back some. We want the last 30 days. There it is. Here's the last 30 days. 30 days ago, we're at $9. We dropped down to the bottom at $8.20. Up, down, up, and here it keeps on going. 11.07. Not an ideal place to jump in, but look at where it is as compared to the high of the year. So we're here at 11. The high of the year is 27. That's a lot of room for it to go. Is it going to do that? Probably not. It's probably going to stair step its way up. What do I mean by stair step? Okay, it may go from 11 to 12, back to 11 to 14, back to 12 to 16, back to 15, and stair step its way up. Now that always goes up and then pulls back because we have two great days, today and yesterday. Okay, it even gapped up and then moved up. But look at the volume today as compared to the volume yesterday. Okay, so is it a good buy? I can't answer that question for you. I have Walgreens in 4 different accounts. Okay, I have 6 accounts. I share 3 of them with you guys. Okay, I think that's more than fair. All right. So, Andrea, what would you do if it's $2 above? You actually have to tell me where you jumped in and where it is now. And you're actually on the morning trading group, so we can cover that in the morning. All right, so we'll cover that one in the morning. Next one, TSMC earnings report predictions. Well, let's take a look at TSMC. TSMC. What the hell is T? That's not even a stock, dude. All right, Ivan. Oh, dude, come on, it disappeared. That was cool. All right, let's keep on going. Where are we doing? Where did I stop? Alright, just because more data on, yep, probably. Alright, Ren, where I had that question. Okay, Asteroid. Is Misty a good dividend stock? Well, let's check it out. MSTY. I'm going to say I have no clue. How's that for an answer? Now, the reason, Asteroid, I have no clue about Misty is because this is a monthly option chart. Or grid, okay? It tells you what the options are going on a monthly basis. I don't trade monthlies because it does not work for me, okay? So if I look at the monthlies, the 2810s, well, it's going for 50 cents. Is that really? No. Interesting. But what was next month's going for? The 28s for next month, $1.35. That's a 5% trade. No, that's a 4% trade. But I got to hold it for 30 days. 30 days is 5 weeks. So, and I have to figure out where it's going to be in 5 weeks. I don't like monthlies. Sorry. And I just don't trade them. Because I look at weekly optionable stocks that have consistently increased their dividends. And that's over 300. So I'm watching 300 stocks on a consistent basis. Now, if I'm adding this one, I'm looking at where is it going to be in 30 days. I have a hard enough time trying to figure out where it's going to be in 5 days because that's my goal. My goal is to, okay, look, 30 days ago, here we go. Let's go back 30 days ago. Right here is the 16th. Here we go. Okay, here's 30 days ago. We're at $20. Okay, that's the low of the 30-day period. She went up, pulled back, up, pulled back, up. Now it's pulling back 3 days back to the downside. Okay, now you tell me where is it going to be in 30 days? Well, this is 30 days here, all this movement. Is it going to continue up for 30 days? I seriously doubt it. But if I bought it today at 28.10, sold the 28s for next month, yeah, I'm picking up. Man, that's the wrong one. I wonder why it looks so favorable. 28, yeah, 135. I'm picking up $1.35 on a $28 stock. So what does that look like? CJ, what was that? What are your favorite resources for learning options for beginners? Now, CJ, I don't like that idea of options for beginners. My thought is, this is just my thought, find a trading strategy that works for you. Now, this trading strategy here that I'm giving you for free, it's safe, consistent, predictable, simple, 1% per week. That's over 50% per year. If you need more than 50% per year, yeah, there are other option strategies out there. But remember, and this is very important, with higher rates of return, you get my favorite book, Rich Dad Poor Dad. Ooh, I like that. Rich Dad Poor Dad, awesome book. And that's for just, financial information. Wade Cook's Wall Street Money Machine. That was an awesome one. And I also took an optionetics course. I think it was like $3,500 for an optionetics course. And that took care of all the option strategies. Not simple at all. Not even close to simple. So with a higher rate of return, there is higher risk. Just keep that in mind. And more time invested in it. Because a covered call, simple, easy. You buy the stock for a certain price, 28.10, great. You sell the 28s, what are you collecting, 135, great. You either get cashed out or you sell another month out for 28. It's actually that simple. All right, so let's keep on going. I missed some of these questions. Thoughts on IAC, where you looked at that one was no. DAC, sorry I missed what you said about Misty. We're taking a look at Misty right now. I don't really know anything about Misty only because it's not something I waste my time with. And I don't mean it in a derogatory way. But here's the thing. There's 9,714 stocks available. I can't look at all of them. Okay, there's almost 100 people in the morning trading group. Almost 100. So there's a lot of eyeballs we have, all with the same goal. How do we have a simple, safe, predictable, consistent rate of return? Now, on the morning trading group, we do have different trading strategies that we do, not just this one. But this is the only one that I give away for free because it is simple, safe, easy, and predictable. It's great starting point. And if 50% a year is appealing to you, great. Just stay here every night and keep learning here and ask questions. Because a lot of you keep asking questions. Great, that's awesome. That's what we're here for. All right, that being said, yeah, so Misty, yeah, I don't do that one. So Simone and Andrea, Walgreens, awesome. It jumped up. I don't know what your positions are on them, so I really can't give you anything. I can really can't tell you anything about that. Now, Andrea, you're on the morning trading group. Simone, you're not. I've learned a ton in the last 3 weeks. Adam, cool beans, glad to hear it. Adam, you told me you did a trade the other day. I want to know how it worked out for you. Seriously, I do. Okay. TSCM, we already looked at that one. No. What should I do with BTI? What the heck is BTI? BTI. Interesting. British Amern Tob. I have no idea what that means. It's a monthly. I can tell you what you can do with a monthly. Now, don't get me who said that one? Tank Doug Nicholas. All right, Tank, I don't do monthlies, and only because they're more aggravation than they're worth, in my humble opinion. Okay, I have a difficult enough time trying to figure out where a stock's going to be in 5 days. I have no desire to figure it out for 30 days? Okay, but here you go. Whoops. Let's go to the 16th. Here's the 16th right there. Okay, here's your 30-day high. Here's your 30-day bottom. Okay? Down, up, down, up, down, up. She's going to the upside. That's about all I can give you. I don't look at it because it's a monthly and the numbers just don't work for me. I got 300 stocks that I take a look at. This is not one of them. All right, I have no idea about anything about that stock whatsoever. I have the strike at 10, expiring Friday, is over 11, about to expire. Oh, Andrea, best thing to do, in my humble opinion, this is not advice. Hold on, Devon. Can you give me advice? Devon, you have to ask me a question first. But it's nice to see you, Miss Devon. Or is it Mr. Devon? I have no idea. 506% gains on DJT. Call. Good for you. I don't do DJT. Okay, Devon, it ain't a profit until you take it. Okay, that's one way of looking at it. Number one, you can take your original investment out, and then you have your original investment back, and just let the rest of it ride. But he could win he probably is going to win the election unless they try to assassinate him again. Think about it. Two assassination attempts in the last 2 or 3 months. You really think the Democrats are going to give up that easily? Hell no. It's like a freaking banana republic around here. It's crazy. Okay, anyway, let's not do politics, okay? So, Tank, BTI, like I said, it's not one that I keep my eye on. Okay, there's 9,714 different companies out there every single day. I can't watch all of them. Thank you for the answer. You're welcome. So, I don't look at it. I can't tell you a single thing about it. I look at dividend stocks, specifically those companies that are consistently profitable. Now, what do I mean by consistently profitable? Well, here's the thing. A dividend is a portion of the profits the company makes that they give to the investors, and that's you and me. Once you buy a stock, you are an investor. You own a portion of the company. So if the company is consistently profitable every single year, the dividends will increase. So you have the dividend kings, 5 decades, 50 years of increased dividends. Okay? Dividend aristocrats, 25 years of increased dividends. Dividend champions, 25 years of increased dividends. Dividend contenders, 10 to 24 years of increased dividends. Those 4 lists right there will give you over 300 companies to look at. They are consistently profitable. Ask yourself the question, why the hell would I give my money to someone who's not profitable? I have no idea why people put their money into stocks that aren't profitable. They're looking for capital appreciation. Great, more power to you. It's like rolling the dice. Sometimes you win, sometimes you lose. It's simple. I got a text this morning saying, you should really look at NVIDIA. It's really great. Yeah, if you put in $100,000 20 years ago, you'd be a billionaire. Who the hell has an extra $100,000 to put into a company just to watch it for the next 20 years? Terribly sorry. I'm 60. It doesn't work that way for me. Okay? Even if I did have 100 grand, I can't think of a single company that I'd put 100 grand into and just watch it. Hell no. 100 grand would give me 50 grand a year to live off of. Okay? There's no guarantee that I'm going to be here in 20 years. Great. My grandchildren and my children will be appreciated. But this is my money. They'd be lucky if they get anything from me. I'm going to spend my children's inheritance. I tell them that all the time. They say, yeah, Dad, whatever. Which is good because they're not looking at me for their their ATM. All right, so BTI can't help you out with that. So Andrea, you're in the morning trading group. My best advice on that scenario, push it forward another week. Because when we go back to Walgreens, hold on. Okay. Okay, so here we are now. You sold the, what was it, the 10? Yeah, you sold the 10, which is right here. Well, you had a big update. You had a gap up on Monday, big update, and another big update on Tuesday. Great. Well, wait a minute. Is that right? No, Monday's here. Tuesday, Wednesday. Okay, so Wednesday. So we have tomorrow. So here's the thing. You can push it forward to next week and go from the 10 to the 1050. Or push it from the 10 to the 11. Or, depending on where you got it at, because right now I have the strike at 10 expiring Friday. WBO is 11. Most expire, but maybe not in this case. Yeah, in this case, hell no. Okay, because right now you sold the 10. The 10 is here. Right now it's at 11. So whoever bought that option from you, it's in the money. Uh-oh. What is that? I'm curious to see how Marathon works out for you. Well, CJ, hold on a second. We'll talk about Marathon in a little bit. I'll write that down. M-A-R-A. I actually have Marathon about 3 or 4 different company accounts. So as I was saying, Andre, I have no idea where you jumped in. more than likely you probably jumped in the 9 or 10 area. And if you sold the 10s, well, it really depends on where you jumped in. Okay, if you jumped in below 10 and you sold the 10, well, just let it go. But if you bought it at 12, 13, 14, Laurie Habel, oh my goodness, Laurie Habel. Greetings, young lady, and how are you today? Nice to see you, kiddo. So anyway, depending on where you got in, would be a good idea where you're going to get out. Now, you could roll it forward for another week, pick up a little bit more money, or you can just let it go, one or the other. But we can talk about it in the morning. So let's keep on moving. Ren, what is the process of making 1% a week, and what do the numbers that you invest in look like? Ooh, Ren, great question. Now, Ren, you're relatively new here, so just hang out and chill. I'm actually going to go through a couple of trades and show you how it actually works. Okay, DCE, Deck Diversified Energy. Oh, DEC. Never heard of it. Yeah, no options, no thank you. Sorry, dude. I have 300 companies to look at. Why would I look at something that's not on my radar? If it doesn't pay dividends, no thank you. Doesn't have weekly options, no thank you. I have enough to do as it is. Why would I look at something that doesn't fit? That's like going to a store and trying on a pair of shoes and saying, wait a minute, it might fit in 5 or 10 years. Why don't I get it now? No, it doesn't work that way. All right, Dick. Nope. Already looked at earnings. Thank you for that. Bama Redneck. Bama Redneck, you've been here long enough. If you want, now you've been here long enough and you participate enough, you could be a moderator if you would want to be. I think we have 3 moderators already. TSMC earnings predictions can't help you out with that one. Can we look at C? We looked at C last night, but we'll look at it again because I like Citigroup, and that's going to be a no only because look where it is. Now, Citigroup's high was yesterday. That's the high of the year. I don't ever buy at the high of the year because you're standing on, all right, this is my analogy. Standing on a ladder, waiting for someone to bring you a taller ladder. If it was worth more than 67, it would have been more than 67 yesterday, the day before. Okay? But the high was yesterday. Today was a pullback. What makes you think that there's not going to be more profit taking? Because when a stock goes up, it ain't a profit until you take it. And nobody ever went broke taking profit. So why hold on to something that's coming down? Because stocks only go up and then they come back down again. Up, down, up, down. That's all they do. They don't come to your house and wash your dishes. They don't fold the laundry. They don't rake the yard. They don't make the bed and put little candies on your pillows. They go up, they go down. That is it. You have a 36 LeBaron. Cool beans. I'd still take a Duesenberg or a Hispano Suizer over that thing any day. Okay, so dude from Iowa. Whirlpool, huh? WHR? Whirlpool. Cool beans. So, Whirlpool, here we go. The high, low, where was it? Where is it? What direction is it going? See, it came down. It made a bottom in June. Now she's going up. She's at 104 at the moment. So the 105s are going for 60. Not this week, but next week, look at this. 360. Nice. That's a nice return. Now, let's take a look at the numbers a little closer. The high of the year, 132.21. Cool. That was back in October of last year. The bottom of the year, 528. It was 84.08. Well, let's look at the last couple of weeks. Look at the last couple of weeks. Up, down, up, down. Now she's going back up again. It's clear to see. Now, you have to ask yourself a question. Do I like Whirlpool? It's an honest question. Do I like Whirlpool? And do I like Whirlpool at this current price? 104. So always buy a stock as if you're going to buy it and hold on to it for a long period of time. What would be the point of buying something and just holding for a couple of days? Well, that's not the intention you go into. The stock market was originally intended for people to buy and hold long term for the growth. Okay, for me, that doesn't work, okay? I buy it, hold on to it for a week or two, get that 1%, and then they done over with. Thank you very much. See you in 90 days. Okay, something to that effect. So anyway, the last 30 days for Whirlpool. Here you go. Up, down, up. Okay, it's at the 105 at the moment. The 105 is going for 360. So somebody wanted to see an example trade. Let's do one on Whirlpool. Now, we already decided we like the 105s. Let's get rid of this. First thing I want to do is I want to change this over to the covered stock. Now, one of the safest trading strategies there is the covered call, where you buy the stock, you sell the option against it. It's kind of like doing your neighbor a favor. Hey, I'm running to the store. You want something? Yeah, pick me up a gallon of milk. Throw you a $5 bill. You keep the change. There you go. Kind of the same thing. But here you're picking up stocks instead. Hey, I'm going to the stock market. You want anything? Yeah, pick me up some Whirlpool. Great. What do I get? I get a little premium. A little bit of a profit for my efforts. Kind of the same thing. I'm oversimplifying it, yes, but adults have a tendency to make this more complicated than it needs to be. Remember, this was created for my 9-year-old daughter. And for those of you that are new here, because I know there's some newbies, here we go.
Hi, I'm JC, and being part of my internet website company, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose.
There's over 20 days in the month of January. There's over 20 days in February. There's over 21 days in the month of March. What does that mean? Okay, so that's me. 12 years ago, I had more here, less gray. I don't know. I don't look that bad for 40. Oh, no, wait a minute. 15 years ago, I would be 45. Yeah, so I was 45 back then. You notice in the background, that's a whiteboard. Okay, so the computer systems 15 years ago weren't what they are today. We had to write everything down on a whiteboard. You know, write month of April, how many stocks we had available, blah, blah, blah. And my very first videos that I did and I shared with you guys was in 2011. You can actually go to YouTube and look at my old videos. Yeah. I like to think I'm getting a little bit better. I don't know. Could be delusional. But anyway, it was created for my 9-year-old daughter. In 2008, she was 9. She said, Daddy, can you teach me to do what you're doing? I want to do the same thing. Great. So here's the thing. It had to be simple. Remember, she's 9 years old. Safe, predictable, consistent, and no way for her to lose. Like that last one, no way for her to lose. So what's going to happen to a 9-year-old girl when she starts losing money? She's going to cry. I'm going to feel like shit. Mama's going to get involved. I'm sleeping on the couch. I'm in the doghouse. I might as well pee on the carpets. You know the scenario. So, simple, safe, predictable, consistent, no way to lose. Okay, that's the strategy I had to come up with. Number 1 rule, never buy something you do not understand. Never sell at a loss. Make sure the company's consistently profitable. Weekly options are a must, and then check the numbers. Leanne Cassidy, holy shit, Leanne, how are you? All right. So, that being said, let's do a quick covered call on Whirlpool. So, I like using Thinkorswim. It's free to download. You can download it for free, and then you can ask Charles Schwab because it's owned by Charles Schwab. I don't get any compensation for you guys downloading it. I've been using it for 20 years because of the perks that it offers. That being said, we said we like the 105s. Here's the 105s right here. Strike prices. Now, if you don't understand what a strike price is, that means if I am buying it for this price here, okay, the last traded price was 104.85. That's the last traded price this afternoon. So hypothetically speaking, it should open up somewhere around 105, 105.50, 106, somewhere in that area. But if I do the 105s right here, I want to click right on there. That doesn't look right at all. Okay. I want to change this to a limit order, and I only want to do 100 shares because if I do 1,000, some people freak out looking at the numbers. So let's do a quick, simple, easy one. All right. So first and foremost, read it out loud so you understand what it is you're buying. Buy 1 covered call of Whirlpool. 18 October 24. No, we don't want to do that one. That expires 2 days. We don't want that one. Let's get out of that one. We want next week's. Not this week's, we want next week's. Here we go. Okay, here we go. We want to buy a 1 covered call on Whirlpool, 25 October 24. That means the option expires next Friday. Okay, so this Friday is only 2 days left, Thursday, Friday. Not enough time value, not really worth our efforts. Now, the 105 call strike against the Whirlpool stock at the market to open. Well, here's my break even. Here's my maximum profit, $395. Remember I said I want safe, simple, predictable, and consistent. Well, predictable, well, it's telling me what I'm going to make before I even do it. Well, isn't that simple and safe? It's telling me right there. So before I hit this button here, which sends it to be filled, I want to check the math to make sure that I'm getting a good return on my money. So I pull up my calculator. Very first thing I want to do, clear this out of there, and I want to take a look at the profit. Well, the profit's $395 per contract. So $395, and I'm going to divide it by 2 different numbers. Number 1 is going to be an all cash account. Now, you have an opportunity to do all cash, or you have an opportunity to do what's called a margin account. Margin account, I suggest people not to do it until you're really good at what you're doing. Okay, I've been trading for 20 years. I have a margin account because I understand the risk. I understand the concepts. Okay, a margin account, you're actually trading with borrowed money. It means I have to pay for the money that I am borrowing. But I make 50% a year, so I really don't care paying 8% to borrow money. So my profit's 42%. Works for me. All right, anyway, so $395 all cash, it would be $10,000. Okay, so let's put in $10,000. 10,105. It says it right here. Cost of trade including commission, $10,000, that's if it's all cash. Well, look at it. 3.9% for 1 week. So you want, somebody asked earlier to show you a trade. Well, here's one right here. Whirlpool. Number 1, have you heard of Whirlpool? Do you know what they do? Is it a company that you like to own? Well, if you do, here's a possibility. This is just a possibility. This is not a recommendation. Okay? Not a recommendation. This is for entertainment purposes only. You know that kind of shit. Entertainment only. Don't listen to a damn word I say. Do your own research. Okay? Seriously. Do you like Whirlpool? Are these numbers accurate? Is this equation correct? Okay, I'm just showing you the numbers. You have to decide for yourself. You need to take responsibility for your own money. I'm just showing you a possibility. If I like Whirlpool, if I buy it first thing in the morning and I do the 105s, well, this is what the 105 is going to give me. If I buy it at the market open and I sell the 105s against it, I get a $395 profit. Well, what is it costing me? Well, all cash, it's going to be $10,000. But check this out. You're going to love this one. The profit's still the same, $395. Now, I told you I have a margin account. So, my margin account, it's only a $4,800 investment. Half the money's mine, half of it belongs to Chucky. Charles Schwab, they're the broker. So, I divide it by that, 4,862, and that gives me a return for 1 week of 8.1%. So if I do I hardly ever get 8. I'm totally honest with you. I hardly ever get 8% for a week. Once this year I got 8%. I got 8.1%. Hold on a second. What week was it? So, and by the way, this is my website, the 10-Minute Trader. These are the trades I've actually done this year. Where's that 8.1%? There it is right here. Ford, Marathon, Schlumberger, Intel, Walgreens, Bank of America, Chevron, MPW, Walgreens, and Macy's. This is just 1 week's of trades. Okay? 819, 819, 819, 819, 819, 819, 821, 823. This is all the week of August 19th. I don't even know what week what is. But those are my trades for that week. I do this every single day. Okay, and I've been doing it for the last 20 years, and it takes me 10 or 15 minutes, my own personal account. Now, teaching you guys, it's a little bit more time and effort in it because I go a little bit slower. So let me show you. Okay, so I like that trade. That is actually a good trade. Who came up with that one? Whirlpool. Who came up with Whirlpool? I don't know. Someone came up with it. All right, Bama Redneck. How much do you invest per month? Take that and put it in a call at 52% a year. Okay, thank you. What does your portfolio look like? Now, Michael, I told you I have 6 accounts. Okay? So I have 6 different accounts. I have 3 accounts that do this strategy only. Okay? The other 3 accounts, they do different things. Okay? Can we look at CNC? Yeah, sure we can. Let's get out of here. Let's get out of here. Whoops. Let's get out of here. Whoops. Let's go to here. Let's go right there. And you want to take a look at CNC. I don't know who it is. Okay. Centene Corp. What the heck is that? Okay, so before I do anything, I want to check. I want to check Yahoo Finance to find out exactly what this company pays out. Oh, there you go. Dude, check that out right there. There are no dividends in the selected time period. So I have 2 criteria and 2 criteria only, Michael. Only 2. 20 years of increased dividends and weekly options. Okay, you do those 2 criteria and you eliminate 98% of everything in the stock market. 20 years of profits and weekly options. Okay, CNC's not in there. I have no idea who they are. I have no idea what they do. Not in my realm of theory. Rick L. Oh, same thing. Hell no. Now, Rick, I'm going to show you something about O that you probably didn't know. Okay? So, Rick, you're relatively new here because if you've been here for a while, you would know I don't like O. O Realty. So let's take a look at it. Okay, number one, O Realty is a monthly optionable stock, which means I can only do it once a month. Now, I didn't go to college, I freely admit that. But I do know for a fact, 52 is a hell of a lot better than 12. What do I mean? Monthly options, there's only 12 months in the year. I can only do it once a month. That's 12 times a year. But a weekly optional stock, I can do it once a week, 52 times a year. So if I'm getting 1% with each option trade that I do, that's 50% per year. It's actually 62 compounded, but I like to say 50 because it's simpler, it's easier to believe than 62. Anyway, so number 1, it's at the high of the year. No, thank you. I don't buy at the high. I don't. Okay? It's a monthly, so that's 2 to the no. But wait! It gets worse. Seriously, it really does, Rick. Watch this. It gets worse. Okay, let's put O into Yahoo Finance and let's see what the dividends look like. So O Realty has been paying dividends for quite a while. As you can see, look at them all. Down, down, down. Now we're going all the way back to 2007. So O Realty has been paying dividends since 2007. But let's take a look at the numbers. Okay, in 2007, it's 12 cents a share. And then it went to 13. 2008, 13. 2009, 14. 2010, 14. Wait. They didn't increase. I like companies that increase every single year. This one didn't increase. 2010, we're still at 14. 2011, still at 14. That's 3 years in a row, no increase. 2012, 14. 4 years in a row, no increasing. So explain to me why you'd put your money into a company that doesn't increase their dividends, which means they're not profitable. So correct me if I'm wrong. Inflation increases every single year. So year here, okay, let's say I'm getting $100. The next year I'm getting $100, but inflation, cost of living, there's no consideration there. Adam, UPS, we're probably not going to get to it. It's 10:30 now. But anyway, Rick, hold on a second. So 4 years, no increase. 2013, now we're up to 15 cents. 18 in 2013. 2014, 18. We got a couple of zeros here. What the hell is that about? No, just blanks. 15, 18, no increasing. 16, now we're up to 19 cents. 20 cents, 21, 22, 23, 25, 26. So the increasing is extremely slow, number one, and it's not consistent. And it's not 20 years. Okay? 19, 20, 19, 18, 17. Okay, so it's not 20 years of increased dividend. But wait, it gets worse. You're thinking to yourself, how could it possibly get worse? They're monthly? No, doesn't work. It's at the high of the year? No, that doesn't work either. The dividends aren't consistently increasing? That doesn't work either. And you're saying, and I'm saying it gets worse? Well, check this out. We're going to go to the summary. What's in the summary? Summary, it tells you exactly what the stock is. Okay, Realty Income, $64.23 a share. What is my rate of return? What is the yield? I'm putting all my money into this company. What are they giving me at the end of the year? 4.99%. Now, you may like the idea of 4.99%. Okay, fine. But that doesn't work for me. I like 1% a week. That's over 50% per year. You like 5% per year. More power to you. No, I don't like O, and there's nothing you can do to make me like it. Terribly sorry. I'm glad to help out anytime. Thanks, Redneck. It's a monthly, yep. Let's look at XPON. Colin, seriously, dude, I can tell you right now, XPON is going to be a no. XPON, and am I right? Am I right? Am I right? No options, no. And I can seriously doubt at $2.74 that they got 20 years of increased dividends. Double no. Uh-oh. Uh-oh, trying to reconnect on Facebook, having issues. I'm having issues with everything. YouTube, Instagram, now Facebook. What the hell's going on? What do you do about floor decor? Floor decor? I have no idea what that is. Can you analyze CNC? We already did that one. 86 is in the house. Yo. Okay, did you see my last video? 155% gain in my Roth? Cool beans. ATNF. ATNF. No options, no thank you. Look at that gap up. Holy cow. She's at like $1.50 and then she jumps up to 18. And you think they can be profit taking? Yeah, no, sorry, I don't do that. I'm up 2,000%. Bond, cool beans. I missed a lot of these questions. La 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 la. Rick, I have a couple of videos, no classes, or nothing. James class will help you. Glenn, can you talk about a couple of ways to reduce taxes? Yes, put your trading account into a. Oh, hold on a second. Hold on a second. I got to come up with the right words. You know, when you get older, there's so many word salad in my head. You want to put it into corporation. Pension. A pension fund inside your corporation. That's the best way of doing it, in my humble opinion. Or you can put it into a trust. Right now, pitch your top 3 stocks, picks, and catalyst, time, horizon, and expected return over the period. Whoa! You're asking a lot from someone who's new here, and I don't know what your parents were thinking when they named you. 1138526300841. How about I just call you Steve? Steve, my top 3 picks. Walgreens, Nordstrom's, and Macy's. There you go. What do I predict every week? Well, I predict 1% every week. That's a 50% per year. And what else? The catalyst. Oh, well, the dividends, the premiums, and the stock movements. Week 3 and my portfolio is up 3%. Ivan, cool. Any learning videos available? Path? Interesting question. considering you say that, hold on, let's check this out. Here's my YouTube right here, okay? This is one of my YouTubes, okay? Let's go back to the oldest. Oldest videos go all the way back until 12 years ago.
Over 10% yield this year. They're Hi, I'm JC, and I'm a 10-minute trader. In less than 3 minutes, I'm going to teach you how to make more than the average bear. There are 5 keys. Key number 1, there are 156 companies paying over 10% yield.
Okay. That's the princess 12 years ago. Now, you got to remember, she was the original 10-minute trader. So let's go the oldest. Okay. 11 years ago, understanding stock orders, stock chart pattern recognition, dividend trading for monthly cash flow, getting familiar with Thinkorswim, simplified stock trade reading, where to find great dividend stocks, receive 10 to 20 checks per month like clockwork, the dividend king. Yeah, you got plenty of videos. There's probably at least 400 videos there. And wait. Podcast. Yes, I've done a podcast over 900. What's the thing? Oh, yeah, right there. Dividend Stock Talk podcast. There's over 900 episodes. Okay? You can listen to any one of them you want. Good morning, everyone. Wow. Good morning, everyone. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. It is July 10th, 2024. Halfway. Yep. Over 900 episodes of podcast, over 300 or 400 videos. Yeah. I've been doing this for a while. Anyway, let's get back to doing some stocks. Break the strategy definitely helps. It's fairly consistent. Stick to quality companies. Couldn't ask for a better one there. There we go. How do I feel about Walgreens? Israel, we already looked at Walgreens earlier. Dark pull from ChatGPT works. Okay. Poseidon's Last Adventure. More than 42% profit on margin. Shouldn't it be 2 times 50 rather than less than 8% juice? Okay. Poseidon's Last Molar, I'm not 100% sure what you're talking about. The name of the website, The 10-Minute Trader, or Dividend Stock Talk. The link is in the profile. Yep. Why do you have 3 accounts to do this strategy? Well, apparently, if you do not have more than 1 account, you trust the powers that be more so than I do. More times than not, I have heard of people getting their accounts frozen, getting their accounts taken away. Yeah, I do not want to be in that situation. So if I have 6 different accounts, they can't close down all 6 of them. Okay, because you don't know. I have some of them. You have no idea who owns them. So that gives me some anonymity. Whatever. Anonymity. Is that right? I don't know. Yeah, I don't like people poking in my business, and if they do, they take 1 or 2 of my accounts away. Fine, I'll have the other ones. Oh, Calibri. Dude, I haven't heard from you in a while. You want to take a look at Micron? MU, here we go. Micron, here we go. High of the year right there. Low, high, low. Ooh, what the hell was that? The high, low, where was it? Where is it? What direction is it going? Okay, she goes up, pulls back. Now it's back up again. It's at 109 at this moment in time. So, if you like Micron, I actually have some Micron, just in case you were wondering. It's currently at 109.62. So the 110s are going to be the closest. $2.80 a share. That is well over a 2% trade if you like Micron. That's always the biggest question. The biggest question you should get before you ask yourself anything else. Very first question. Does it make sense? That's number 1. Question number 2, do I like this stock? Do I like it enough to buy it and hold on to it? Okay, does everything I'm saying make sense? Okay, so Micron, a year ago, we're at 68.95. The bottom of the year was the end of October, and that was 63.67. The top of the year was actually a double top at 157.69. Now, from the top of the year, she just drops, finds the bottom, back up, back down, back up, back down, back up again. That's all stocks do. They go up, they go down. That is it. That being said, let's take a look at the last 30 days to see if it makes sense for us to jump in and take a look at it. The 16th was 30 days ago. Here we go. 30 days ago, 86. Okay, she gets to 96 before she gaps up. Now, a gap like that is eventually going to fill, which means this thing's going to come down and fill that gap. The gap starts right here at 96. Well, currently at 109. She went up, down, down. Now she went up. She's going to the upside still. Fine. Do you like Micron? That's a very simple question. It's really not that difficult. It's currently at 109.62. The 110s are going for $2.80 a share. Let's do another quick trade. Make it look yummy, lack of better words. First thing that popped in my head, we like the 110s. There's the 110 right there. Let's do 100 shares so don't scare people with the big numbers. I like market orders so it fills instantaneously. Also, market orders. With a market order, you're filled at 9:31. Market opens at 9:30. You're filled at 9:31 because it's a market order. It fills instantaneously. The one thing I like about a market order first thing in the morning is the stock and the option are intertwined together. So the profit that I'm getting, I already know what it is. So, buy one covered MU, 25 October 24. That is the call strike for next Friday. Not this Friday, but next Friday. The 110 call against the MU, Micron, this gets the stock. Here's my break even, 106.68. Well, it's currently at 109. So the maximum profit is $3.32 per share. Same scenario. The cost plus commissions, $10,066.68. Okay, so let's do that. Clear this. 332 is the profit divided by the purchase, 10,668, and that gives you a grand total of 3%. Look at that, 3.1%. But the biggest question before you do anything, do I like this stock? Never buy something you don't understand. If you don't understand Micron Technologies, don't buy it. It is such a simple concept. If you don't understand what they do, I know what Ford does. I know what General Motors does. I know Bank of America, Wells Fargo, Walgreens, CVS, ExxonMobil, U.S. Steel, Walmart, Walgreens. I know what those companies do. Do I know what Micron Technology does? That's a question you need to ask yourself before you buy anything. Do I know who they are? Do I know what they do? Is it a safe investment? That's a question only you can answer. I don't give anybody tips. I just read numbers and give you my interpretation. Purely entertainment. That's all. Just entertainment, education, however you want to look at it. Do your own research. Does it make sense to you? Okay, let's get out of that. Let's get out of that. Let's get out of this. Let's get out of that. Let's get out of this. Back to that. And we're back to where we started again. Okay, so let's keep on going. All right, Eric, new here. What's the premise on the strategy? Ooh, Eric, you ready? I gotta take a deep breath for this one. The premise on the strategy is simple, safe, predictable, consistent 1% per week, using nothing but pre-qualified dividend stocks that have consistently increased their dividends for a minimum of 20 consecutive years, and weekly options. We use what is called a covered call strategy, a simple, safe, predictable strategy. One of the safest strategies there are, the covered call. Okay, we look at the chart to make sure it's the right time, and we don't want to buy at the high, we don't want to buy at the low, we want to buy it when it's bouncing off the bottom going to the upside. That was a mouthful. Hope you got it. Now, what you might like is that this screen right here is all being recorded on YouTube since the beginning of January. That's when somebody was stupid enough to show me how to go live online. They pointed the camera at me and say, push this button, push that button, you're good to go. Well, here we are. 9 months later, here we go. So that being said, or is it 10 months? Wait a minute. We're in month number 10, so I've been doing this for 10 months. Wow, I've only missed 5 days. Now, I used to say I only missed 2 days. One day I was sick as a dog. Day number 2, I had to take someone to the emergency room. Sat there until like 2 or 3 in the morning. Okay, one of those things. Last 3 days, hurricane. You know, so the hurricane came in, took away the internet, took away the electricity. Interesting. Now, Leanne, you're down in the Fort Myers area, from what I understand. Hope everything's down good, okay, down there. Okay. Anyway, so let's keep on going. Did they retain earnings and invest and grow in the opposite to paying a dividend? Well, here's an interesting question about that, or to address that situation. Now, there's 9,714 different companies available that you can invest in at any moment. Any day of the week, 9,714. Half of those companies are going to take all the profits, put it back into the company for capital growth. If you're looking for capital growth, you are in the wrong place. Don't get me wrong, I love to entertain people. You're more than welcome to be here. But if you're looking for capital growth, you're in the wrong place. Here, this strategy is specifically designed for safe cash flow. So 9,714 companies, half of them pay a dividend, a portion of the profits back to the investors. The other half take all those profits, put it back into the company. So I look at those 9,700 companies and I say, oh, great, how many have 20 years of increased dividends? 2 decades, 20 years of increased dividends. Out of those, how many have weekly options available? Well, now we're only looking at 300. 300 is more than enough. I am happy looking at just 300. Okay? That being said, let's keep on moving. CJ, if you're only in for a 1 week, why does it matter so much that you like the company? The concept makes perfect sense if you're holding long term, but I'd like to understand the why. Ooh, awesome question. Because, just because the stock is in an upward trend, is that a guarantee in which it's going to continue to go up? Because you are going to buy something and it's going to drop. If you think it ain't going to happen to you, you're sadly mistaken. It only goes 3 different directions. It goes up, it goes down, or it goes nowhere, sideways, whatever you want to say it. Now, like I said, I've been trading for over 20 years, the longest I've ever held anything, and I didn't do it on purpose. Kimberly-Clark last year, I bought it and it went down. I held on to it for 9 months before she came back up and I was able to sell it at a profit. So make sure you like the company because you might have to hold it for longer than you want to. So make sure they have dividends. So in that 9-month period when I held on to Kimberly-Clark, I caught 3 dividends because they pay every 90 days, every quarter. January, February, March, first quarter. April, May, June, second quarter. July, August, September, third quarter. October, November, December, fourth quarter. We are currently in the 3rd week of the 4th quarter. There's only 13 weeks in the quarter, okay? So after this Saturday, there's only 10 weeks left until the end of the year. 10 weeks to the end of the year. So always make sure it's a company you like and you want to hold on to because you might have to. Okay? Now, Wynn, W-Y-N-N, which is Wind Resorts, I bought that back in May. I still own it. Do I want to own it? No. But I do collect a premium from it every week. Thygo, what is selling calls against your, what about selling calls against, yeah, that's what we're doing here. I buy a stock, I sell calls every single week. Okay, Monday, Tuesday, Wednesday, Thursday. Okay, we have a morning trading group. We're on at 9 a.m. until you guys are done asking questions. On Fridays, one of our most important days. Friday's at 3 o'clock, an hour before the market closes, because all our options are going to expire. Sorry, I just got here 2 minutes ago. Not a problem. Friday at 3 o'clock, because options expire or become worthless at 4 o'clock. And we want to make sure we don't lose any money. That being said, during the hurricane last week, now it's kind of funny now, but it wasn't funny at the time. Okay? Last week, I lost $2,200 because I couldn't get online. Yes, I do covered calls. Thank you, Mark. So, last Friday, we were on our live trading event at 3 o'clock, Friday last week. I'm driving around St. Petersburg looking for a phone signal. I get a phone signal. I was able to do 4 trades. I wasn't able to do trade number 5. Trade number 5 went against me. I lost $2,200. Yeah, I'm a little upset about that. However, it gives me a big, huge, this is what's going to happen if you don't do it. I actually lost $2,200 on Friday because I couldn't get online because of the hurricane. Okay, no electricity, no internet, phone cell service. Cool. Okay, no cell phone service, no internet, and so it can happen. Okay, it happened to me on Friday. So we jump on it Friday at 3, and we walk through all the trades to make sure nobody loses money like I did. Now I can laugh about it now, but I was thinking to myself, this fucking sucks. $2,200 down the tubes. But it is a learning experience. I'm actually going to get me one of those, what do you call those things? Those satellite dishes. So I'm going to put it on my RV. So, and then I'm going to have, well, I already have solar on the RV. So the RV, I can park it in the middle of nowhere and I have electricity. And then the satellite dish will allow me to do my trading from anywhere. Yeah, so it was a $2,200 learning experience. Okay? So yeah, it does happen. All right, so anyway, did you retain? Okay, blah, 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 blah. Okay, all those questions. What are the risks? Oh, I just missed that one. I missed that question. I gotta go back. What are the risks, downside, or things to look out for when investing in dividend stocks? Oh, was it? Is that Steve again? 1138526300841. Yeah, I'm gonna just call you Steve. Steve, here's the risks. Okay? If you stay in bed in the morning, you risk missing life. If you get out of bed, you run the risk of getting hit by a car. If you eat a certain food you never ate before, you run the risk of getting sick. If you don't eat, you run the risk of dying to malnutrition. There is risk everywhere you go in life. So you want to talk about risk in the stock market? Great. If you don't invest, you risk losing your money through depreciation of your asset. That's the dollar. Inflation. Okay? Now, you may not know this, but in the last 4 years, you lost 40% of your buying power. Reason being, when the government throws all this new free money into the economy, yeah, your dollar is now worth less. Not worthless, but worth less than it was before. You think that free money was free? Remember that $1,200 that the government gave you? Yeah, that $1,200 cost you $17,000 long term. What do I mean by that? Well, you take out all the money that they gave away, you got $1,200 of that, right? You take all those billions upon billions and you divide it by how many taxpayers there are, and you come up with $17,000 per taxpayer. All that money the government paid out. You got $1,200 of it. Where did the rest go? Billions went overseas. Whole shitload went to corporations to keep them afloat. Okay, you think in '08, all that bailout money, you don't think you and I got to pay for that shit? Yep. Anytime the government prints money and gives it away, you and I have to pay for it. You take all that money that they're giving away, divided by the taxpayers, that's how much each taxpayer's got to pay. So that $1,200 check that you got, say, thank you, free money, it ain't free. The most expensive money in the world you could ever get is free money. Think about it. Billions on billions of dollars they printed out and they gave out to everybody. You divide that by how many taxpayers there are paying the taxes. That's what it cost you, $17,000 for that $1,200 check. Looks like we're on the same strategy. MU is trading around 110. How much credit are you trying to collect per week on each contract? I try to get at least $1 on per contract per, yeah. Okay, Fago Caproni. Ooh, what a name, cool beans. Yeah, I look for a 1% per week. That's it, simple, 1%. Whether it's stock appreciation, whether it's option value, whether it's a dividend, I take a look from every different angle to see if I get a safe, simple, predictable, consistent 1% per week. That's my goal. I've been doing it for the last 15 years, except for last year with those 3 lemons. I had 3 lemons last year. Target, TGT, Kimberly Clark, KBM, I think it was, and then PPG. Those 3. Kimberly Clark I held for 9 months. Target and PPG I held for 6 months. Target, I lost $15,000 in a week because of what's called a black swan. Let me show you what a black swan is. Right here. Okay? You see that right there? Last November, Target's at 108. It stopped out at 110. Okay? Now, I had Target at 135. I bought it in July. Way the hell over here in July. Okay? Now, 6 months later, here we are. I sold the 112s. It's currently at 110 right here. Very next day, she jumps up $16 overnight. That's what's called a black swan event. Reasons called a black swan event because you don't see very many black swans. You don't see this happening that often. It jumped $16 overnight. It's great if you're on the right side of it, but if you're on the wrong side of it, yeah, that cost me 15,000 bucks. That right there. I had no choice. Pay the 15 grand or lose 25. There wasn't a third. There was a third option, but I didn't know it then. I know it now. Okay, so this will never happen to me again. Okay, we learn from our mistakes. We make a mistake, it hurts. Okay, this one it was 15,000. It's not as bad as the other one I made. Whew. I lost 91,000 in a week back in 2001, 2002. Ugh, that was very uncomfortable. Okay, so Shannon wants to take a look at Ally. A-L-L-Y. Now, Ally is on Warren Buffett's list. So that's why we're looking at Ally. Now, I do have some positions in Ally. Look, we got, here's the high, here's the low, here's where it was, here's where it is. Look at the direction. Up, down, look at the big gap. And she goes back up again. Okay, currently we're at 36.14. The 36 is going for 145. That's almost a 3% trade. Well, I would love to get 3% trade every week, but I don't. You know, I average 1%. That's okay. So, Ally Financial. A year ago, it was at 24.83. Topped out at 45.25, and that was the end of July. That is the high of the year, end of July. From there, she drops down, and then she has this big gap right here. Gaps down. I always tell people, if you do not take your profits, look at this. If you do not take your profits, the market maker will take it away from you. You do it all the time. Where it gaps down, and then she slowly go back up again. So people who have it here and they don't take their profits, well, yeah, they're going to lose that much money. Only if you sell, of course. Because people do. They panic. They sell. Oh, it's dropping. Let me get up. Yeah. Never buy something you don't want to hold on to. That's why I say anytime you buy something, make sure you buy it as if you're going to hold on to it for a long period of time. Because this might happen to you. As a matter of fact, this probably will happen to you. It's a game that we play. It's kind of like Monopoly, but we play it with money. Okay? So number one, never buy something you don't understand or you don't want to hold on to. Never sell at a loss. That's a big one. People panic and they sell at a loss. That's why rule number one is so important. Never buy something you don't understand or you don't want to hold on to. It is that simple. Okay? Make sure the company's profitable. All right, so here's the high right here. 43.86. drops. Here's the bottom, 31.92. The last 30 days. What is the last 30 days showing you? The last 30 days, 30-day bottom. The 30-day top was yesterday. So hypothetically speaking, by, what do they call that? Logic. Okay? What goes down, gotta go up. Up, down, up, down. That's all they do. Up, down, up, down, up, down, up. Well, where's it doing now? Hypothetically speaking, she should be coming down, but she's still in an upward trend. Okay, so it goes up a little bit of profit taking. Goes up a little bit. That's that 2 steps forward, 1 step back. You see it? 2 steps forward, 1 step back. 2 steps forward, 1 step back. 2 steps forward, 1 step back. Same thing. Never buy something you don't want to hold on to. Cool. Okay, BTI is British Tobacco and not a monthly, pays 74-cent dividend. So why the hell would I want to look at it? Okay, no, Tank, don't get me wrong. If you like it, perfect, awesome. That's all you need to want. That's all you need to do. Hey, that's funny. You are Steve. What a coincidence. 113825263. That's weird. Your name is actually Steve. Walgreens, Macy's, and what was the third one? Nordstrom's. Okay, JWN. Asteroid wants to take a look at YMAG. Yeah, it's a hell no. But we'll take a look at it. YMAG. That's not a weekly, dude. That's a monthly. And I told you earlier, I don't do monthlies. They just don't pay the same. Sunny, QDTE, you're new here. The reason I can tell you're new here is because QDTE is a big fat no. QDTE. Monthly, no. Okay? Now, I didn't go to college. I have no problem whatsoever telling everybody I didn't go to college. I took the path less traveled. I got out of high school. I joined the service. I got out of the service. I took it in an apprenticeship on commercial displays. Okay. From that, I started my own manufacturing company. I ran my own manufacturing company for a while. I was actually a CEO. You believe that shit? I had employees. People were looking up to me. Weird. Weird how life works. All right, so YMAG, yeah, no, dude, sorry. QDT, no. All right, thank. Have been trading SMCI for a while. Oh my goodness, SMCI. Fago. Have been trading SMCI for a while now. Risky trades, but pay well, 2% a week on covered calls. Cool beans. I don't do SMCI. SMCI. And here's the reason why I don't do SMCI. SMCI. Into the Yahoo trade grid. I mean, to Yahoo, what do you call it? Okay, so historical data. Now, I want to look at the historical data. I want to look at dividends only. And this is why I don't do SMCI. There you go. There are no dividends in the selected time period. Now, the reason why I like dividends, I say this often. Okay, this, as we know, is a calendar. The month of August. Let's go to the month of August, September, October. Here we go. Okay, so month of October. Here we go. The first week of October. John Deere, Fifth Third Bank, Mendeley's, U.S. Bank, Cardinal Health, Comcast, Cisco, American Express, Bristol Myers Squibb, J.P. Morgan. Every single one of those companies, I know exactly who they are. I know exactly what they do. They pay a dividend. And they consistently paid a dividend for a very long time. That's why they're on. Now, this is my personal list. One of my personal lists. Now, the reason why I like these companies, because they have a tendency, listen closely, they have a tendency to increase in value before the dividend. So there's only 2 reasons a stock moves. Only 2 reasons. One is a known reason. We know it's going to move because we know what's coming up. We can plan for it. And then there is the second reason, the unknown reason. What's the unknown reason? The unknown reason can be a natural disaster. Hurricane, we just had one. Flood, tsunami, landslide, hurricane, tornado. What else we have? The Exxon Valdez, when that crashed in. We didn't know that was going to happen. Okay? British Petroleum sprung a leak in the Gulf of Mexico. We didn't know that was going to happen. Okay, so a known event you can plan for. What are known events? Well, you have dividends. That's a known event. We know when they're coming up. Earnings reports. We know when those are coming up. Stock splits. We know when those are coming up. Conference calls. Annual reports. Seasonality. What is seasonality? Winter, spring, summer, fall. Certain stocks move a certain time of year predictably every single year. Why does Weight Watchers go up in value the beginning of the year? It's a crappy example, but we all know why Weight Watchers goes up at the beginning of the year. That's like gas stocks go up in June and July. Why? Because families go on vacations, because kids are out of school, they pack up into the car and they drive. Gas stocks go up in June and July. Okay, oil stocks go up in March and April. Why? Because we all turn our furnaces on to heat our houses in November, December, January, February. By March, the oil tank is empty and you have to fill up again. You can fill up any time during the year, any time at all. But we all turn them on at the same time. November, December, January, February. March, the tanks are empty. We need to refill. Why do oil stocks go up in March and April? There you go. Certain stocks move a certain predictability every single year. That's seasonality. You can plan for that. That's why I like dividend stocks. I know when they're going to move. So knowing when they're going to move is only half the equation. So what do? Do you buy the stock and get the run up? Maybe. Do you do a covered call? Do you do a cash secured put? Do you do a spread? What trading strategy do you use when you know something is going to move? What? I do the covered call, and I do it predictably and consistently every single week. Ugh. All right, well, let's continue. Holy cow, it's 11 o'clock. We got 30 minutes left. Let's keep it going. Mindy, hi, how are you? Ooh, 86 wants to take a look at ConocoPhillips. I can't think of one, but I'm sure there are some. Okay. Albert, tuned in late. If not covered already, can we look? Ooh, we haven't looked at Kohl's yet. Let's look at Kohl's, and then we'll look at ConocoPhillips. Kohl's. Now, I do have some Kohl's, just in case you were wondering. I'm into Kohl's at 23.23. Right about there. Look where it is. It's at 19. I'm into it at 23. But here's the thing. I still get a premium on it every single week. Samlac, do you trade cash secured puts? Yes, I do. But not here. Okay, this channel here is one trading strategy and only one trading strategy. I'm a nice guy, but I'm really not that nice. I give away all this information for free. I stay here for 2.5 hours every night and help you guys out. I give away something, not everything. Okay? So, how much should we invest in each? Mindy, that's a question you need to ask yourself. I know nothing at all about you. I cannot tell you what to do unless I know more about you. Okay, and this is not a platform for that type of a conversation. So right now, let's take a look at Kohl's. Kohl's, KSS, the high, the low, where was it, where is it, what's the direction? Look at this, up, sideways, down. Now she's bouncing off this bottom right here. And she's going to the upside. Cool. Well, what are the numbers? Remember I say, rule number 5, make sure the numbers work. $19.90 a share. Okay, So what's the closest strike? Come on, everybody knows. Everybody knows, or I should say everybody should know, what is the closest strike price to 1990? Well, it's 20, right there. What's the 20 going for? 48 cents a share. How much is 48 cents out of a 20? Well, simple. 48 cents divided by $20 is 2.4%. If I like Kohl's, I can do a trade on Kohl's and get a 2.4%. Now, you may think 2.4% is not a lot, but that's for 1 week. Let's multiply it out by how many weeks are in the year? 52. That is 124% if you get 2.4% every week. Who else gets 124% a year on their investments? Safely, simply, predictably, and consistently. That's my goal. Okay, I'm looking for 1%. I look for a safe bet. Okay, so 1990, the 20s go for 48. I could do the 1950s. It's a safer trade, lower return. The ginger tea and honey actually helps out. All right, that being said, well, let's keep on rolling. Kohl's is a sinking ship. Well, Luke, if you don't like Kohl's, don't buy it. It's not brain surgery. I mean, think about it. All right now we're looking at Kohl's, KSS. Here's the high right here. Here's the low. Here's where it was. Here's where it is. Here's the direction. Up, sideways, down, sideways, and up again. 1990 is the current price. Okay? If I buy it at 1990, I can sell somebody the rights to buy it from me via a covered call. One of the safest trading strategies there is. Buy the stock, sell somebody the rights to buy it from you at the exact same price. It kind of like doesn't make sense. If I'm buying it for 1990 and I'm selling it for 20, well, I'm only making 10 cents. No. You're making the 10 cents plus you're making the 48 cents a share. That's 58 cents a share. That's over 3% for 1 week. So the question is, do I like Kohl's? Well, somebody over here on YouTube already said they don't like Kohl's, sinking ship. Fine, don't buy it. It's actually that simple and that logical. You don't like it? Don't buy it. All right, anyway, let's take a look at the numbers. A year ago, Kohl's was at 1860. The high of the year was 2970. Well, look at the last 90 days. Down, up, down, up, down, up, down, up, down, up, down, up. It's going up at the moment. Well, cool. Well, let's take a closer look. I like looking at the last 30 days because the last 30 days gives me a good idea of where it's going to be by Friday. Okay? So 30 days ago, 1975, we dropped down to 18, shoot up to 21 and a quarter, back down to 1875. Now we're up to 2025, and this right here, she closed lower, but she has a higher, what do you call it? When dividends start hitting a double digits and the stock is dumping, I'm out. Alrighty, Luke. I'm glad it works for you that way. This works for me this way. Now, I already have Kohl's, so I don't have very much of a choice. Weekly, not monthly. Got it. All right, so 1990s. I'm not telling you to do this. If I buy it tomorrow at 1990, I sell the 20s, I get 48 cents. I can do the 1950s and get 76 cents. Well, let's take a look at the 20. Let's actually do one for the fun of it. Just for the fun of it. Now, we want to change this to a covered call. I like the 20s for next week. Here it is right here. I'll do just 100 shares so I don't scare people away. 'Cause I usually like to buy 1,000 shares at a time or a certain amount. Market order, there we go, and confirm. And here's what it sounds like. Buy one covered call against Kohl's, 25 October 24. That's the expiration date for the option. Okay, this is a weekly option trade. 25 October 24, that's next Friday. the $20 call against the Kohl's shares to open. That's 2 trades. You're opening a stock trade, which is buying 100 shares, and I'm opening a second trade, which is the option trade. I'm selling the covered call. Great. My break even is 19.29. Well, the stock is currently at 19.90. Okay, maximum profit on this trade is $70.50 per contract. Okay, so if I do 1 contract, it's $70. If I do 10 contracts, it's $700. 1,000 contracts, it's $7,000. Okay, it's all relative to how much money you have available. When I say 1% return, if I have $100,000, 1% is $1,000. If I have $1 million, 1% is $10,000. So on and so forth. Okay. So take out calculator, $70.50. Divided by how much is the trade costing me? 1,930. 1,930. It comes to a grand total of 3.65%. Well, 3% for 1 week? Hell yeah. I like Kohl's. I'm not buying Kohl's to hold on to it for the rest of my life. I'm buying it for 1 week or 2 weeks. That's it. I want to get in, I want to get out. Now, that's for the 20. Well, let's see what the 1950 looks like, because the 1950 is going to give us a different number. So let's get out of there, and let's go for the 1950. Okay? Now, the 1950 is going to give me a different set of numbers because it's further in the money. The further in the money you go, the safer the trade, the less rate of return. Remember, I'm only looking for 1%. So what is the 1950 going to give me? Okay? The 1950 has a break even of $19.02. Well, it's currently almost at 1990. The break even is 1902. So anything over 1902 by next Friday is going to be a profit. That works for me. All right. My maximum profit, $47.50. Clear. $47.50. Now, the purchase price, it's going to be the exact same, $1,903. Okay, $1,903. That gives me a grand total of 2.5%. Well, so here's the question you need to ask yourself. Do I want to do the 1950 and get 2.5%? Or do I want to do the 20 and get 3.4%? Well, the difference between the two, other than the amount you're going to return, is the safety factor. Okay, well, if the stock is at 1990 and I sell the 20s, well, the stock has to go up in order for me to get all my money back. At the 1950, well, the stock doesn't have to do anything. It's just got to stay above 1950 by Friday. So there's the question. Do I like Kohl's? Well, I do. I already own some of it. Okay. Do I like the 20s or do I like the 1950s? You know what? Just for the fun of it, let's look at the 19s. Okay. So we were looking at the 1950s. Well, let's see what the 19s look like. Okay, we're going to change this again to 19. And you can do this as many times as you want until you find something that works for you. Okay, so at 19, our profit is different. Look at our break even. Our break even is at 1863. Well, it's currently at 1990. So as long as she's above 1863 come Friday afternoon, I'm still in over profit. Okay? So the 37 is the maximum profit. I'm going to walk away with this one. Clear. 37. And I want to divide it by the purchase price. Well, here the purchase price changes a little bit. 1,863. So divide it by 1,863. Well, now I'm walking away with 1.98. That's almost 2%. And it's a safer trade. The higher you go up in the food chain, or the, what do you call it, in the money, okay, I can even look at the 1850s. Well, let's take a look at the 1850s. More creators want to co-host. Yeah, I get that. I'd love to have a co-host. So you want to co-host with me? Fine, great, lovely. Give me a call first, and then we'll chat. because I don't want to talk about Amway. I don't want to talk politics. I don't want to talk religion. The only thing I want to talk about is investing in dividend stocks. That's it. I do get requests for co-hosts all the time. All right, so let's try the 1850s and see what that looks like. It's always going to be a numbers game. Okay, so look at it this way. The break even now is 1834. The current price is 1990. So as long as she stays above 1834, I'm making a profit. But I'm only walking away with $15 this time. I don't know if that's going to give me my 1% or not. But let's get the calculator and find out. Clear that. $15.50 divided by the purchase price, $1,835. Now this is per contract, okay? That's 0.8. Okay, so that's not going to work. So we're looking at the 19s or the 1950s. Those are safer bets. Because the 18s, their number doesn't work. That's how you figure it out. What is my profit? What is it costing me? How much am I walking away with? Okay, 0.8, that doesn't work for me. It's still over 40% a year, if you like it, safer bet, but not as much money. I like 1% a week, so that's going to be a no for me. Cool. All right, so that being said, let's go back to where we were. We have enough for a couple more. Back to my starting gate. Back to the starting gate. Here we go. All right, so 86 wants to take a look at ConocoPhillips. C-O-P. ConocoPhillips. Woohoo! High, low. Where was it? Where is it? What direction is it going? Look at that. Down, up, down. 105.90. So we all know 105.90, the closest one is going to be the 106, and it's 128. That's over 1%. It's actually that simple. If you can't figure out your percentages, here you go. 105.90. You just take the little point and you move it over 2 places. So it's $1.05 is 1% of $105. Okay, what is it? The premium? 128. That is more than 105. Okay? Now, let's take a look at the chart and see what's happening. It's probably going to be a no because look what happened down here. All right, so let's take a look. A year ago, we were at 125.70. The high of the year was in April, the middle of April, at 135. And then we dropped here. Here's the bottom of the year on the 11th, 9/11. 9/11 right there. 101.30. That's the low of the year. Okay. But look at the movement. What predictability. Look. Up, down, up, down, up, down. Well, what do you think is coming next? But what I want you to take a look at, I want to zoom in here and I want you to take a really good look at this. Here's the last 30 days. Okay? Up, down, up, down. Look at gap down, gap down. So what happens with the gaps? Gaps have a tendency to fill. So this gap right here, she's going to turn around, go back up. Now, I like 2 days to the upside. So tomorrow is a possibility for 1 day to the upside. Friday, 2 days to the upside. That means Monday, this is a perfect, could be a perfect example for Monday. Because we know the premium is there. We know we're going to collect that over 1%. And we know up, down, up, down. We're just waiting for it to find the bottom, turn around and go back up again. That's my invitation. Okay? That's as simple as I can possibly make it. Now, before we go any further, what does ConocoPhillips usually do this time of year? For that, we look at the seasonality chart. Well, you might be asking, what the hell is a seasonality chart? Well, here you go. Seasonality chart, this is one whole year. All the way to the left is January 1st. All the way to the right, December 31st. The blue line represents the movement for this year. Down, up, down. Okay, the red line is 10 years of average movement. That's 2014, 2015, 16, 17, 18, all the way up to last year. 10 years of movement. This is what it averaged. This is what it normally does. Here's where we are right here, this little blue dot. This was today. So what's it going to do in the next couple of weeks? That's this area right here. Well, let's zoom into it and see what it looks like. I blew my cursor right there on the blue dot, left click, drag right. So for the next 2 or 3 weeks, this thing's just going to go nowhere, just sideways, just flat. That is perfect for covered calls and spreads. Okay, no movements, no big jumps, no big drops. That's what I like. Because if I'm going to be buying ConocoPhillips, I don't want to be in for a surprise. Now, seasonality doesn't really mean anything other than that's what it did over the last 10 years. Well, what does ConocoPhillips do? Oil and gas. Okay, not much has changed in oil and gas over the last 100 years. You know, they get oil, they refine it, and they make gasoline. No huge breakthroughs. Okay, so that being said, everything looks good except this right here. I'm waiting for the bottom and for it to turn around. Is it going to turn around? They always do. Stocks go up, stocks go down. What happens when it goes down? It gets down to a certain point where people like me and you, or me and some of you, say, wait a second, that's cheap, I'm going to buy some. And then when it gets up to here, it says, holy shit, there's my profit, I'm taking it. I will take a profit at 2 or 3%. I'm only looking for 1% a week because I want simplicity and consistency and safety. Okay, those are my 3 criteria: simplicity, safety, and consistency. I'm retired. I want to make sure that I'm getting the same amount of money every single week, and my account is growing very small. So my account does grow every week, but I do spend most of the money for, living expenses. That minor tedious thing that we have to do on a monthly basis or weekly basis. All right, I'm getting all tuckered out, but we only have a few minutes left, so let's go through some of these questions. All right, Mindy, I can't tell you how much to invest. Okay, Ben, are you in his trading group? Yep, 86 is. How long have you been in and how you doing? Okay, Ben. Mac, that's essentially what he does from my understanding. All right. Mac, show me one paying 1% per week. Sure, okay. 86. I'm not, but I know many others that are and had success. 86. That's the only because I understand the strategy. Yep. Yeah, 86 is not in the morning trading group. I don't know why. Dude, why not? Okay, I've seen you in the comments a lot. You trade often. Yep. Can this strategy help a person retire? Actually, Ren, I am retired. This is where I make money. Justin, do you know if you can do covered calls in Robinhood? Yes, you do. I actually have accounts in Robinhood. I love Robinhood. It's right there in front of me. However, Robinhood has one major obstacle, and here it is. With Think or Swim, which is owned by Charles Schwab, I can sell an option on Monday and do absolutely nothing, and on Saturday, because options expire on Saturday, even though you can't do anything on Saturday, they will expire worthless. Now, Robinhood, you cannot let them expire worthless. You have to buy them back. Even if it's 1 penny a share, you have to buy them back on a Friday by 3:30. If you do not buy them back at Friday at 3:30, they will do it for you. And guess what? They will not give you a favorable amount. They'll just give you whatever the market value is. So usually in my Robinhood account on Friday, I buy back the options and I sell the next week's. I just roll them forward every single week. Now my Robinhood account averages anywhere between 3 to 5% per week. I'm perfectly good with that one. Think or Swim, it's anywhere around 1 or 2% a week. So you take it into consideration. Yes, you can do it with Robinhood. It's a little bit different though. What could you have done on that one? Okay, Kay Scott, I'm going to apologize right now because I get questions from 1, 2, 3, 4, 5, 6 different angles, and I can't get to everybody when they post their questions. So the question you're posting, I have no idea what you're talking about. Okay, had I looked at it when I was talking about that, I would have known. But, I have no idea when you put that question in because it's not time stamped. Can you tell us a third option, please? Uh-oh, Simone. You know, you're one of my favorites, Simone. However, I have no idea what you're talking about either. Okay? Over here. John Dubba, how are you doing? John Dubba. Dubba. Okay. Mac, I do more, but he shows every trade on his account, and you can watch every trade from his podcast. Yeah, thank you. All right, Redneck. What strategy are you using to make 1% a week? All right, Steve, we are using the covered call strategy. I did a couple of them here. 86. I don't for a living. It can definitely help with retirement. That's what James uses it for. Yeah, I do. I use it for retirement. I use this. I do some synthetic covered calls and puts. Okay. Mac, it's double. It's doable. Yep. Nothing is guaranteed, but you can look at James' trades. Yeah. Mac. So this is for you, Mac. Are you ready? Here are my trades right here. Go to the 10minutetrader.com. Okay, here are all my trades. Week number 39, week number 38, week number 37, week number 36, 35, 34, 33, 32, 31, all the way down to week number 1. I do this every single year. Okay? Week 1, first quarter, 2.12% in this account, 2.99 in this account. Okay, at the first half of the year, it was only 2 accounts. Second half of the year, I added a third account. Now, here's the trades on week number 1. Macy's, General Motors, Ford, CVS. This account here, CVS, General Motors, Southwest Airlines, Comcast, Ford. Okay, week 2, week 3, week 4, week 5, so on and so forth, all the way up there. Now, I just added this last week. Okay, my first trade, my very first trade, and my blog post back in starting date, August 31st, 2011. That was the first blog post I did. Okay, now I've been trading with my daughter since 2008. I started trading back in 2000. Well, actually before that. It was in the 90s I first started trading. But I first started this trading strategy with my daughter. And I started posting when somebody was stupid enough to show me how to do a podcast. Not a podcast, a blog post. 2011, I started with $82,000. I averaged 9.75% per month. Okay, 2012, 8.7% per month. 2013, 3.34% per month. You know, I don't know why it went down, but it did. But here's all the trades right here. Okay, July 6, 2013. There was a huge drop in the last few weeks. We took a break from trading and waited until the dust settled. We didn't take any losses this year. We're looking for a no loss. We have dropped down to only 20% return so far at the halfway point of the year. Our weekly average has dropped below 1% per week. Our monthly average is only 3.3%. Even with a big drawdown, we still blah, 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 whatever. But you can see February 2013. What's this one? December 2022. Week number 51 for this year, 83.7% running total. 157% with our weekly average of 2.34%. Okay, I've been posting these silly little things since 2011. All of them are up there. You probably can't find these old ones anymore because I don't do that. I don't do blogging anymore. I just do live nowadays. But all my trades for this year are right here. Okay, now do I get 1% every week? No, I do not. Where is, look, right here. Week number 3, 0.85%. That's not 1%. Week number 4, 0.9%. Not 1%. It averages around 1%. So if you look at them, 1.03, 1.06, 1.9, 2.03, 2.3, 4.6, 3.9. The numbers are all there. All the trades are there too. Okay? Kohl's, Abelmal, Paramount, Nordstrom's, Ford, Nordstrom's, and NCYB. What's that? New York's Community Bank. Okay, they're all there. How do you deal with the settlement time on trades? I don't worry about them. I do weeklies. I buy on a Monday, I sell the covered call on a Monday, and by Friday, that position is usually settled. Okay, so that being there, that being there. Let's take a look at the last few questions we got. All right, Ben, can you give a small explanation on how options work? Yes. Ren, are you ready? This is how an option works. Let's say, hypothetically speaking, you have a 1984 Camaro sitting in the side of your yard. You decide, hey, it's time to get rid of this thing. You take it out of the side of your yard, you put it on the front lawn, you slap a for sale sign on it, $1,000. Great. Tom down the street comes by and said, hey, I like your car. Let me give you $100. Hold it to me until Friday. You say, okay, fine. Friday, you come by and give me $1,000. I'll take the $100, put it in my pocket, 1%, and I'll hold it for you. So Tom comes back Friday, he buys you for $1,000. That $100 is kind of like an incentive to hold on to it. That's simplified. Same thing. If I buy ConocoPhillips at 105.90, hold on, Adam's got a question. What's the strategy when after your stock doesn't get a sign and the price drops out? I know to hold and never sell for a loss, but there's another way to go about it. You're absolutely correct, Adam. Okay? I don't like selling at a loss, and I don't think... I did take a couple losses this year. One was Friday. I had no choice in the matter. Didn't have any service and timed out. That was, I'll be laughing at it for a while, but you know, $2,200 is nothing to laugh about. But still, it happened. I'm not going to deny it. I'm not going to say I win all the time. I don't. As a matter of fact, hold on. Let's get out of that. Okay. Profit and loss statement right here, year to date. I have how many? 1, 2, 3, 4, 5, 6 losses. But no, I don't. Because see, I still own it, 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 still own it. So I have 0 losses in this account. Now, this account here, okay, so this account here, I have 2 losses. Walmart and Ford. That's it. I still own all the other ones. So I get 2 losses in this account, no losses in another one, and I think 3 losses in the first account. So yeah, I lose every once in a while. Nobody wins them all, except for, your name is Pelosi. She wins them all, because she's privileged. Anyway, so how does it work? An option is nothing more than a promise to sell, to hold it for someone else. Okay? So if I buy it at 105.90, I'm selling somebody the rights, not the obligation. Okay, big pasta. Hold on one second. So if I buy it at this price here, that number never changes. Your entry price never changes. It is what it is. Okay? Now, what is going to change is this right here. This bullshit. Up, down, up, down, up, down. It goes all over the place. But here, if I buy it at this price, I can sell somebody the option to buy it from me, from any one of these. 101, 102, 103, 104, 105. Those are called strike prices. Okay? Over this side is options. Sorry. This option over here is the call option. This side over here is the put option. In this account here, with you guys here, I don't do this. It gets a little confusing. I only do this one. So if I buy it here, I sell this one here. I'm doing you a favor. I'm buying it at 105.90 and I'm selling it to you at 106. And for that privilege, you're going to pay me $1.28, $1.28 per share. Now, the contract, the way it works, is from the time you pay for it or the time I receive the money, whoever bought it from me has the right, but not the obligation, to buy it from me at a certain price, 106, by a certain date, the date of expiration. In this example, it is 25 October. next Friday afternoon. So if tomorrow morning I buy this and I sell a covered call, whoever buys that option from me can buy the stock at 106 anytime between when they give me the money and the time it expires. Okay, that's as simple as I can possibly get it. So we got last question. Big Pasta, when do you know to take profits? Big Pasta, I can't believe you're asking that question. Seriously, think about it. Okay, I'm going to give you a couple of neat little sayings. Number one, it ain't a profit until you take it. That's number one. And number two, this is a good one. Somebody told this to me once and I had to stop everything I was doing. I had to pull over on the side of the road, get a piece of paper, write it down, because once you get to my age, you got to write shit down or you'll forget it. So here it is. You ready? Nobody ever went broke taking profits. It was that good. I had to stop what I was doing and had to write it down. Nobody ever went broke taking profits. When you hit your price target or stay greedy and maximize gains. Big Pasta, I cannot tell you that. I cannot answer that question for you. If the profit is there, take it, don't take it. It's up to you. That's a decision you've got to make. But like I said, nobody ever went broke taking profit.